Welcome to lesson number 4, which we're going to talk about the point of interest. I'm going to open your eye today so you can understand where is the specific reaction, any reaction came from in the market. So first let's start what is the point of interest. In this lesson we are going to cover the point of interest for short. A POI is a price level where we can expect the market to give a reaction from, and an area where we can expect a setup to form, and can also be where we can potentially execute a trade. Okay, so the main issue people have with the POI is that there can be so many of them visible in the chart, and the majority of the people don't know which POI to choose. And I'm sure that maybe if you're an advanced trader, you have this problem too, that you're gonna have a lot of POI and you don't know which one is the high probability. So which one is gonna be playing? We can execute trade and it's gonna be high probability POI. That's why we most have some rules behind the way we select them to ensure we give ourselves the highest odds possible. So let's start with this rule. I'm going to teach you the rule that I'm using to take my POI. So it's a 4 different rule. A high probability POI must be selected from higher time frame. The high time frame is king and always be king, right? This is the main reason why people can choose a POI, because they spend their time looking for it on the lower time frame and end up having too many options, which is not an ideal method for long-term profitability, right? So you should take the POI in a high time frame. Again, as I told you in the last session, the more you go to the high time frame, the more potential manipulation or strong liquidity you're going to have. Again, same for the POI. The more you take it from the high time frame, that's a high potential area. So let's go with the rule number 2, which is going to be a high probability POI must have a liquidity resting above it. If you're looking for to buy, and below if you're looking to sell, right? This gives the market a reason to tap into your POI, and it's also give the market a reason to reverse from your POI. So each POI you're going to choose, below and above it. If you're looking for buy, for sure above, and if you're looking for sell, below it should be a liquidity. So that's a reason of the manipulation. So why you expecting to price tap to the POI and just come down for no reason? No, that's not going to be accepted. The manipulation should be behind that logic. So, and the rule number 3 is going to be high probability POI must be unmitigated. It should be fresh. Okay, and the last rule, a high probability POI should be the closest to the liquidity. Okay, in the topic of the liquidity, we saw that how quick they can cause the manipulation. So it's most likely you will be very quick to reverse. They will be very quick to reverse. So if your POI is not closest one, it's likely you will miss the move. So let's start with the first type of the POI, which is an order block. Maybe you guys will know what's the order block, but the way that I take the order block is going to be a little bit different from you. The first type of the order POI, it's an order block. We have the bullish order block and the bearish order block. A bullish order block is the last down candle or the candles before up move. I'm going to show you an example. The reason I say candle, it's a polar, that's because of the same consecutive, the color candles are just one solid candle on the high time frame. So when I say the candles, I mean the candles. If you go to the high time frame, that one bullish candle you're going to see, it's that 5 bullish candle going to be one. I'm going to show you one example, right? And I say, and also for the bearish order block is the last up candle or candles before the downside. For an order block to be valid, it must take out the liquidity. That's give a purpose. You can mark out the entire candle if you like. However, the majority of the value is in the body. So far, I mark it starting from the body because there's a lot of volume there. So it's going to give me a snipe entry. Just to be aware that there will be times where it doesn't tap to the body also. So that means you should just, if you just want to look for confirmation in those areas, which I'm going to teach you how to look for confirmation in the last lesson, I guess. And just to take the whole area. Now let me show you some examples here. Now take a look to this bullish order block, right? So the last bearish candle or the downside candle before the bullish move. So, and the order block should take out the liquidity. So you can take the whole area or you can take the body. So, but take a look, there is a liquidity above it. It's the nearest liquidity, and price tapped and going to reverse, right? So let's go with the bearish one. Take a look. The last bullish candles before the bearish move, which in this case we can take the whole area as a body area, and this area get taken out by liquidity. We have the liquidity risk below it, and price going to take out the liquidity and going to reverse. So this is the order block, bearish and bullish order block. which we're going to dive into some examples in a live chart. So now let's dive into the breaker block. The second type of the POI, it's bearish and bullish breaker block. The breaker block is simply an order block that was not respected. So when price breaks through the order block, the market can return to it on their side and use it to make its move. The breaker will typically be found in a specific area of the structure. I will add a diagram here, so let's take a look. So as you can see here, the breaker block, it's usually that order block didn't get respected. So this was a bearish order block here, and price didn't respect it and create a break of market structure to upside. And what we can expect in the breaker block, that price pull back and tap to that order block and cause the beautiful reaction for us. So pretty much a bearish failed order block going to be a bullish breaker block for us, and failed bullish order block is going to be let's say bearish breaker block for us. Take a look. This is a bullish area here, okay, that get failed. The bullish order block get failed by break of market structure here, then the reverse price and the retracement price tap this area and pretty much come down. Now take a look to this example. Take a look, just follow my mouse, okay? So this is a bearish order block, right? The last bullish candle before the bearish move, and also take on the liquidity. Now price break this area with the break of market structure. So in this case, what price gonna do? Price gonna, in the pullback, we can expect this area can act as a POI, and price gonna go up for sure. If you have a liquidity here, that's gonna make it more high probability area, right? Now take a look to this one. Just follow my mouse. This is a bullish order block, right? The last bearish candle or candles before the bullish move, right? So price didn't respect it. Price just break this area with the break of market structure. Now this area changed from a failed bullish order block to the bearish breaker block, and we can see beautiful liquidity here. Price tapped in and it starts to reverse. So now let's go with the imbalance fill. The third type of the POI is imbalance fill. Maybe a lot of you guys just tried ICT concept, which is the fair value gap. It's the same name. Or I think API. A lot of people call it differently, but the way I look to the fair value gap is completely different. I look at it as a fill area, which I'm going to talk about. So, but first, let me just talk about, for those who don't know, what is the imbalance. When price has not been delivered fairly between the buyers and sellers, the market will become one-sided, which end up leaving an imbalance or the gap in price. The way we can identify an imbalance is the gap in the middle of the three candles. So between candle 1 and candle number 3, there will be a gap where the candle 1 and candle 3 do not touch. If they touch, then there is no imbalance. Let me just take a look, right? So let's take a look here. So 1, 2, 3. The first and the third candle leave a gap. So this area is going to be imbalance, right? Now, take a look. The first and third, they are touched. This is not imbalance. This is the bullish one. The first and the third one leave a gap. This is imbalance, but if they touch, there is no imbalance going to be here. Now, what is imbalance fill? Now that you understand imbalance, you can now understand what I mean an imbalance fill. To put it simply, an imbalance fill is when the market returns an imbalance and completely fill the gap. So in a bearish example, the imbalance would be considered filled once price tapped to the low of the first candle. Take a look. This one, we're talking about this one. And pretty much in the bullish one, price tapped to, again, fill this area. So let me show you one example here. Take a look. This is the bullish imbalance. 1, 2, 3, right? Between this here and the third candle, there was a gap. Now, price filled the 50%. Maybe the ICT trader is going to enter. We don't care. We're looking for an imbalance fill, right? So in this area for me is still didn't get filled, the whole 100%. So I'm looking for this area as my imbalance fill. Now, maybe you ask, Evil, but isn't this area, it's a bullish order block to take out the liquidity? Yes. So sometimes you're going to have a multiple POI in one line. And if you have those multiple POI in one line, guess what? You have a fucking magic POI. Okay? Because you have a liquidity above or below it, it's unmitigated, it's 2, 3 top of the POI in one line, and guess what? The market's gonna actually, the price gonna respect that shit, right? So that's one of the important things. Take a look, price filled it and go up, and for sure we had a liquidity below it, above it. Let me show you one more example. See, 1, 2, 3. Here is the gap, and what we are looking for here, not the 50%. Maybe price tapped the 50% and reverse. We don't care. But we're talking about the imbalance fill. Price filled this area and reversed. I'm going to show you an example. Now, there are 3 more POI left, which those are also a strong and great POI. Maybe you never heard about them. And there are, I'll explain them full detail on a VIP group, which if you're interested, for sure there is a link below which you can join. But right now, let's dive into those POI. So I'm going to go to the high time frame. I'm going to start from the high time frame to show you those type of the POI. Let me just hide this so we can have a full focus on this area. So let's just start with the order block, right? Let me just go to the 1 hour time frame. Okay, take a look. This is an order block, right? The last bullish candle before the bearish move. You can take the whole area or you can take the body here, right? Now, take a look. This is a bullish order block. The last bearish candle before the bullish move. Maybe you see a different type of the POI. Congrats. You have a pile of eyes, right? But I'm going to explain all of them step by step. Okay, this is the bullish and bearish order block. Now, let's dive into the bullish and bearish breaker blocks, right? So, take a look. This was a bullish order block. The last bearish candle before the bullish move. But what did price did? Price just break this area with the break of market structure. And price retrace, tap to this area, and respect it. So this is a bearish order block. Now let me show you one more. Take a look. This was a bullish order block, right? The last bearish candle before the bullish move. Now price break this area with the break of market structure. See, price break this area with the break of market structure, then price reversed. Okay, now let's go to one more. Let's stay in the 4 hour time frame. So take a look. The last bearish candle before the bullish move. This is a bullish breaker block. Price break this area, the break of market structure. So now this area became, let's say, a breaker block. See, price tap in and give us the reaction here. Now let's look for one more. Which I think we can go to the lower time frame and look more there. So I can go to the 15-minute time frame. Okay. And take a look. This is a live example. This is a bearish order block, the last bullish candle before the bearish move. Price break this area as a break of market structure. This area in the future can become a beautiful breaker block area. And also we have a liquidity below it. Take a look. Sell side liquidity below it, so this is going to make it stronger. Let's dive into one more example. Yeah. This is an awesome one here. This is the bearish order block, the last bullish candle before the bearish move, right? Now take a look. Price break this area. So now this area became a bullish breaker block. And see, price react to it. Now let's dive into the imbalance fill. Take a look. 1, 2, 3. We have a gap here, right? There is a gap here. But what are we talking about is the imbalance fill is going to be this area. We're talking about the fill. So price should fill this area. And see, price going to fill this area and come down. And I'm going to react. I'm going to show you one more example here. Again, there is a gap here. This is an imbalance fill. We don't care if price filled to 50%. We are talking about the fill, imbalance fill, right? I can show you one more also. See, one example here. This is an imbalance fill, price 50%. We don't care about the 50%. The only thing that we care is the fill area. So in the future, we can take this and also see this, the order block here that take out the liquidity. which is insane. And also this is going to be a future liquidity for us. Should be smart here. So in this area, in the next, if price come down, yes, we can take this area as a beautiful imbalance fill. Now, one more example of the imbalance fill, and we can go to practice phase. So take a look again. We have imbalance fill. What we're going to talk about, we're looking for this area as imbalance fill, and also we have a beautiful order block. Price filled this area and gave us a beautiful reaction. So that's it. Just don't forget to practice. Train your eye to identify these areas as fast as possible. The more you fast become in technical analysis, the more you are going to stay away from the psychology and the psychology decision. So I'm going to tell you why in the last session that psychology also is why what's so important. So, yep, that's it. Now, see you in the next lesson.